Hey, it's Clay at claytrader.com. This is my top 10 stocks as we head into Wednesday, February 21st. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this would be a video for you. First off, a couple clarifications. Number one, the candlestick that you see right there will be moving around. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So ticker symbol number one, CPOP. And very, very nice day. And then as I speak, very, very impressive last 30 minutes. And like I was saying, that's why I like to do these when the markets are open, because this thing is creeping up towards the key area of resistance headed into tomorrow, and that level sits right up here at the highs from today at $8.80. Market closes here in about 15 minutes. So potentially, maybe the thing doesn't get the break. Now, if you're watching this video and you're looking at your chart and saying, well, geez, the price is actually above 880, well, now you'd be asking yourself a different question. You would be saying, okay, the break has happened, but is this the start of something even bigger? But right now, the question still remains, can the price get the break at that level? It's looking very, very plausible at this point, but that still remains to be seen. But like I said, again, if you're watching this and the price actually did break up through there, you just get to ask yourself the next fun question. Okay, the break has occurred, but is it the start of something even bigger? As far as supports, if there's any sort of pullback, keep an eye on that $5 mark. And then from more of the overarching standpoint, watch that purple line down here, which is the 50 period simple moving average. So as time goes by, that line's going to move itself higher and higher and essentially serve as an overall uptrending trend line. So as long as the price stays above that purple line, then the overall trend is still plenty in the bull's favor. Next one, ticker symbol LUNR. Again, LUNR. And nice pattern here has formed, so let's get this all drawn into play. So top part of the pattern here, we have a nice little resistance trend line right there. And then as far as supports are concerned, have a nice little area right there. Let me change that to green for support. And then maybe make it easier to see as far as the pattern. Let's keep it all one color here. So we have our resistance, we have our support. We have the nice move up right there. A few golfers out there. We'll put the golf hole down here. And this would be a bull pennant pattern. So while nothing is guaranteed, is it plausible? Is it valid that if the price can work its way back up to the top part of the pattern and then get the break, that break in and of itself could create additional buying pressure? That is certainly a plausible scenario. So if you like bull pennants, if you like this price range, certainly keep an eye on LUNR. Next one, OCGN, and same general idea. Not quite of as good a looking pattern, but nonetheless, got to think a lot of people have drawn that trend line right there. And I make the comment about a lot of people drawing it because when a lot of people are watching the same levels and wondering the same things, call it a self-fulfilling prophecy, call it whatever you want. It can certainly produce some very dynamic movement. So as I've said, no guarantees, but if the price can curl back upwards and get through that trend line right there, is it valid to think that that break in and of itself could create additional buying pressure? That is certainly a more than rational outcome that could come there. Even just, like I said, you're going to have people saying, I'm a breakout trader. Oh, look, this thing's breaking out. Oh, that's what I'm supposed to buy. So they just buy for no other reason other than it's breaking out on a level that they've drawn, that a lot of other people have drawn. So keep an eye on that from the resistance standpoint. As far as supports are concerned, if you like to play pullbacks, and I would definitely say interesting area down there around the 96.5 cent mark. So keep an eye on that. But all in all, big volume today. A nice little pattern here, but we'll see if the price can curl back upwards and maybe make a push to new highs. Next one, SOXS, and I've talked about this one several times before, and it was looking like it was potentially game over, but today, very, very impressive move. And, you have this pattern here that is starting to form. But really, at the end of the day, to simplify things, it's all about that pink line there, the older brother of the 50-period moving average, the 200-period moving average, and you can see that, generally speaking, that pink line prevented any sort of momentum from really establishing itself. Yes, a couple times the price did get up above the pink line, but then it was like, somebody flipped the switch off and, the momentum just disappeared. And then you can see right there, essentially went right back to acting as resistance. So overall, moving forward, that pink line there, definitely going to be that main area of resistance that you're going to want to keep a close eye on. In terms of areas of support, I'm going to go ahead and adjust this level up. First key level that I would say right there at $4.49. Let's just call it $4.50. So right there at $4.50, and then a much more important level, I would call it down there at that 50-period moving average. The reason being, if the price were to drop below that purple line there, at that point, the price would be down around here, which is literally where it just was, down in this area of the chart. In other words, that would imply that the price made a great move and has now gone right back to where it started. Not exactly the sign of genuine strength. But as far as resistances are concerned, definitely keep an eye on that 200 period moving average. Next one, AMC. And today, not the greatest of days. It's not like everything was ruined, but the price did break down below the purple line, which you now know is that 50 period moving average. So that doesn't mean that it's game over, but it does mean that's going to be the near-term area of resistance, and that's just based on a foundational rule in charting, which we see play out here in the real world perfectly. That general rule being when levels of support are broken and closed below, they tend to act as resistance, and you just can't make this stuff up. So it broke, bounced up, and look at that. Look right where it got rejected. That former area right there. So a classic example of a support now behaving as resistance. Again, that doesn't mean that the price can't break above that purple line. I'm just saying it makes sense why it did get rejected there, and that moving forward, that'll be the main area that you have to watch it from a resistance standpoint, and then with the $5 mark up there from the overarching one. As far as areas of support are concerned, just going to go ahead and adjust this level down, and you can see right around this 455 mark, is where the buyers finally stepped in today. And then from a big picture, overarching, I would say do or die level, that's where the pink line comes into play, 200 period. But as of now, price isn't anywhere close to it. But nonetheless, from a general standpoint, that would definitely be a very, very important level of support that you would want to see hold strong, assuming you're bullish on the chart. Real quick, want to take a break and personally invite you to get signed up for this free live online webinar that I'm offering in a couple of days. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free webinar. If you're watching on YouTube, there's a link down in the description box you can use to sign up. Or if you're watching at my website, there's an area on the page there that you can click to sign up. But like I said, if you are enjoying yourself and you want to learn more, then definitely go get signed up for that free webinar. Next one, NKLA, and a brutal, brutal move today. And this is one of these situations where I hope people were using stop losses, because you can see here, nice gap up. Price ran all the way up to that area. And I mean, true story to think that there were some poor souls buying right there, and then just completely collapsed back down, which makes it relatively interesting now moving forward, because it's right back down in this area that that has provided bounces on several other occasions. So let me move it down here to that 68 cent mark, and then we're going to take a quick trip down memory lane so you can see exactly what I'm talking about. But you can see right here, generally speaking, found some support, bounce, support, bounce, support, bounce, support right here, and it has already started to bounce. But my main question mark moving forward is this the start of an even bigger bounce? Is there more strength to come, or is this just going to be a dead cat bounce where it rolls back over? But even if it does roll back over, do you get another bounce at 68 cents? So definitely a couple different angles that you can approach this. But my core argument, at least my key observation, is 68 cents clearly has a track record of providing bounces. So if this thing does come down to 68 cents, that could be very interesting. But it has already started to bounce, and these things have made bigger bounces before. So is this the start of an even bigger bounce? Like I said, that's another angle you could look at this situation. Next one, TSLA, Tesla. Rough day to hit today, but ultimately a very important level held up strong, and maybe you know right where I'm going to talk about. But the key level that held up strong, pink line there, 200 period moving average, classic example of the power of charts, and that's why I've talked about this pink line quite a bit. Look at it. Not once, but twice. 2 times in a row, price bounced essentially right off that area, and now it is bouncing upwards. Now, the thing to keep in mind is, yes, you have this upwards channel there that has formed. But what was happening before this upward channel? Well, you had this nasty move right here, which is actually now giving me the ability to draw a bear flag pattern. Not just because there's a bearish pattern doesn't mean the price is going to go down. Just like if there's a bullish pattern doesn't mean the price is going to go up. So I'm not saying that the price is for sure going down. I'm just saying that I'd be a little skeptical and not get too excited about this current movement right here, because like I said, it's ultimately just formed that bear flag pattern. But bear flags can be, broken to the upside, and maybe that's what happens too. So first update is I got to get this from support to resistance, so 196.50. But even in the near term, before you even put too much focus on that level, prices first got to get up above that purple line there, which you now know is that 50 period moving average. If the price does roll back over, then yeah, that 200 period moving average right there going to be the main and key area of support. Next one, MARA, and same general idea, and why I wanted to talk about it right here is, yes, there's no doubt about it. You can't deny the fact that late day today, this thing has had a nice upwards bounce. You can't take that. That could have been a better line. Let's try that. There we go. This thing has had a nice upwards bounce, but you got to ask yourself, well, what was happening before the bounce? Well, you had this nasty move here. So again, another bear flag pattern. So a couple different scenarios, because as I said, just because it's bearish does not mean it's for sure going to go back down. So maybe if it does break to the upside, if it does, well, then the key level to watch is going to be that purple line there, 50 paired moving average. If the bears do get a push to the downside and continuation, next very key level right there, that pink line, the 200 paired moving average. So keep an eye on that dynamic there is, what's actually going to happen with this bear flag pattern. And then to give a little bit of other context, you can see that big picture wise, the price is still within an overall uptrend. In fact, I'll make this very crude, but big picture wise, yeah, you have this pullback, but what was happening before this multi-day pullback? You had this multi-day move here. So big picture, there's actually a bull flag pattern, but in the very near term right here, you have that bear flag. So there's a bear flag occurring within a bull flag. Now, how do you want to read that? How do you want to go about it? That's going to depend on your particular strategy and situation, but that's generally speaking, the patterns and how they're breaking down right now. Next one, PLTR, and overall, not the greatest day today. However, it did certainly improve because earlier on in the day, the price actually broke down below the bottom part of this channel right here, that key level of support being right there at the 23.30 cent mark. But also, the rest of the story was after breaking down, the price did recover back upwards and is now back up above that area. So as of now, so far so good. 23.30 still can be considered an area of support. But that'll be the first question mark moving forward is, can this area actually hold? Or is this just a little temporary bounce before the price rolls back over? Because yes, in some senses you could say, you're going to talk about the bear flag, and I wasn't planning on it, but now that I look at it, yeah, that'd be a valid observation on your part. So a lot of bear flags out there today. If the price does roll back over, then the first key level you'd want to watch is down here at the 22.80 mark, and then from that bigger picture point of view, down there at the pink line, the 200 period. If the price does bounce back upwards, then first key battleground is going to be that 50 period moving average. So overall, a lot of these charts are having the 50 period and 200 period as of right now, really playing a vital role moving forward. But not always the case, but today, just one of those days where a lot of charts pretty much are, almost saying the same things. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market as a whole is going to rise, this one will also go up. And overall, yeah, rough day today with the way it started, but it is bouncing. Yeah, once again, you have a general bear flag, pattern. But what I'm going to do here is just move this area of support down here to right here at the 54.50 mark, and one that I'm not going to consider a do or die level, but one that I would say is relatively important, because if the price were to come back down to 54.50 and then drop below there, you have one of these situations again where the price is all the way back down where it was from a few weeks ago. Once more, does that destroy the entire chart? Of course not. But that would start to suggest that, okay, maybe things are starting to get a little bit more shaky compared to what they were, because now it's been a while since the price has gone back to multi-week lows. I mean, usually after the price breaks up, it never looks back to where it was. It doesn't go back to where the previous move had been, but that's what's, essentially 54.50 is representing. Does the price go back to this general area of the chart? Again, does not destroy the entire NASDAQ market or anything like that, but just something that from a technical standpoint, I think that would serve as a leading indicator that maybe there's a little bit more weakness out there than what people realize. On any sort of bounce back upwards, main area is going to be that pink line right there, classic example of, again, check it out, was a former area of support, fell below it, now it is acting as resistance, so keep an eye on that. A nice little bounce here late day, but we'll see if the bulls can continue to build upon that momentum headed into Wednesday. So that wraps up the top 10 list. Again, if you like what you saw here, then definitely go get signed up for that free live webinar later on in the week. It'll be Thursday, February 22nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, definitely comment below if you enjoy these. If you have any suggestions or questions, hit that like button. And like I said, leave any comments down below. Sorry, I was trying to read something and then I won't even try to play it off. I distracted myself. But yes, if you enjoyed, then definitely go get signed up for the free webinar. Hit that like button, leave a comment below if you enjoy these top 10 videos. Thanks for watching. Take care. Have a good one.